In the first quarter of 2025, in Nigeria, capital inflows stood at $5.6 billion, according to the Bureau of Statistics data. Gross external reserves improved to $41 billion. The Nigerian Policy Advisory Council report on the national economy has also set an ambitious goal of achieving a GDP of $1 trillion by 2030 with clearly defined priority areas and strategies. Banks are being recapitalized to support financial needs of a much larger economy. Our deep dive looks at the signals and the noise as we look at the Nigeria economy outlook for the rest of the year. Hello, this is Global Business Insights, where we probe in more depth into the main headlines and share perspectives in what some have called a more dynamic context. As we expect August Nigeria inflation to continue to abate, albeit modestly, amid positive investor sentiment driven by a relatively stable and market-driven foreign exchange market, separating the signal from the noise can be helpful to ground any analysis in realities and not just optimism. Key data signals continue to be sparse on jobs added, for example, retail sales, consumer sentiment growth, and the Nigeria GDP quarterly growth print is too far in the rear mirror and not as granular to show the high inequality and uneven performance of the sectors. Also, double-digit inflation growth is highly unlikely to support robust economic activity. Apart from high inflation, analysts point out that lingering high illiteracy, insufficient electricity and electric power, weak savings driven by households under pressure are also making high per capita GDP growth a fantasy despite well-meaning intentions, lofty aspirations, and admittedly much progress. There are, however, things that we can celebrate. The policy mix is the best investors have seen in over a decade. Assets are undervalued. The stock market is cheap compared to its long-term price earnings average, although an expected uptick in the dollar in 2026 could hit emerging market and frontier assets. The currency could also be tested by a crude oil demand shock in 2026, which could confirm more stable, diverse sources of foreign exchange, especially with the reserves. Foreign direct investment, however, remains lackluster and has to be an area to work harder to attract investors who, for now, prefer shorter-term, more volatile foreign portfolio inflows. Analysts are also observing that as Sub-Saharan Africa emerges as the third fastest growing crypto region with strong retail activity, crypto activity is surging, driven by a growing B2B sector boosting cross-border payments, also largely driven by moves to hedge against inflation, working around challenges and rules and tightly controlled access to FX, making it attractive as an alternative savings tool. Also, we see a larger share of crypto transactions under $10,000 compared to the rest of the world, with Bitcoin dominating in both Nigeria and South Africa. South Africa has a more advanced regulatory framework, fostering a more institutionalized crypto market with hundreds of virtual asset providers already licensed. South Africa is seeing more institutional momentum in emerging as a leader in this crypto space, looking at infrastructure and compliance maturity. As cryptocurrency becomes more mainstream in the United States, there is also an evident shift in Sub-Saharan Africa. Between July 2024 and June 2025, the region received over $205 billion. That's on-chain value, up 52% from the previous year, with a higher spike noted by the exchange activity in Nigeria. It is yet unclear the risk implications of this increased foray into the crypto world and to what extent these flows aid illicit capital leakages. But But let us conclude on the outlook for Nigeria going into Q4. Quarterly GDP growth is expected to go up to 3.7 to 3.9% by Q4, helped by oil production at 1.7 million barrels per day, but with Brent crude still under $70 a barrel. Nigeria's annual inflation rate eased for the fourth month to 21.88% in July 2025, the lowest level since January 2023, from 22.22% in June, helped by currency stability, drop in gasoline prices. But food inflation, that's the largest component of the basket, accelerated for the second month to 22.74% from 21.97%. That was the month before. For the rest of the year, inflation is forecasted as range bound between 21% and 22%, also with external reserves going up to about $45 billion. The expectation, however, is that the Central Bank Monetary Policy Committee will cut rates by 25 basis points later this month. Well, I would say barring we get a huge upside surprise on Monday. We will have economist Okweyemi Agbaje to bring further analysis on the August inflation print next week, and he will also continue with his own views on the economic outlook. To more business news, the European Central Bank held interest rates steady at 2% yesterday as economic uncertainty persists, adding that the European economy is showing resilience despite US tariffs. Ahead of the decision, markets had been pricing in around 99% chance of the ECB's key deposit facility rate being left unchanged for the second consecutive time. The central bank last cut rates in June, bringing rates further down from last year's record high of 4%. Prospects in the US economy could not look any brighter as the main market indexes hit another record high as at yesterday close. The optimism continues to drive rally of stocks, also as data looks more benign than was expected. The Russell 2000 index, that's a gauge of small caps, was up 1.8% to reach its highest level for this year. Wall Street's AI trade continues to propel the market to record highs, and the Oracle's stunning share price gains are another example. Oracle shares jumped 36%, that was on Wednesday, after reporting massive cloud demand numbers, setting the company to a historic daily gain. Oracle said it had $455 billion in remaining performance obligations, up 359% from a year earlier. The street was looking for about $180 billion in RPOs. That's a remaining performance obligations, or what you could call backlog. And it's a strong indicator of future revenues. And they were looking for a much lower number. Now they're talking about a number that is more than double analyst expectations. Oracle benefits from an artificial intelligence boom thanks to its cloud infrastructure business and its access to NVIDIA's graphics processing units, or the GPUs as they call it, which are both needed to run large workloads, but also amid fierce competition from other cloud providers like Microsoft, Amazon, and Google. Some of the improved mood in the US markets comes from the data. We saw US Department of Labor reporting number of people who filed for unemployment benefits for the first time, now at its highest level since 2021. Jobless claims came in at 263,000. That was an upside surprise instead of 235,000 expected. That's as at the 6th of September, affirming a picture of a labor market that could use some help from the Federal Reserve. And what about inflation? Wholesale prices unexpectedly fell in August. That's the PPI, Producer Price Index, dropped to 2.6% year over year, far below the 3.3% analysts expected, and of course showing minimal impact from hiked tariffs. The next day we got the August CPI annual inflation rate up to 2.9%. That was yesterday. That's for August 2025, the highest since January, after holding at 2.7% in both June and July, in line with market expectations. Core inflation, which excludes food and energy, remains steady at 3.1%, the same as in July and at February's peak, while core CPI rose 0.3% month on month, matching July's pace and also as markets expected. The Federal Open Market Committee meets next week, and the 25 basis points rate cut is almost guaranteed. The bullishness in markets, driven by expectation of Fed FOMC rate cuts, is linked to the fact that lower rates will boost hiring as companies take on growth initiatives with loans that come in cheaper. Meanwhile, still on the Federal Reserve, lawyers for Trump yesterday asked a federal appeals court to let his bid to fire Fed Reserve Board Governor Lisa Cook take effect before the central bank's rate-setting committee meeting next week. The request to the U.S. Court of Appeals for the District of Columbia Circuit came 2 days after a lower court blocked Trump from removing Cook from her post while her lawsuit proceeds. Meanwhile, Stephen Miran, a top White House economic advisor, moved closer to becoming a Federal Reserve governor after clearing a Senate Banking Committee vote. Citigroup CEO Jane Fraser, in an interview yesterday, said merger activity is rebounding as U.S. companies are gaining confidence from clearer policy signals, with the recession looking very unlikely. Talking of capital market activity, Warner Brothers Discovery stock surged more than 20% yesterday after reports that Paramount Skydance Corp is preparing a bid for the entertainment giant. Paramount Skydance is reported to be working on an offer for all of Warner Brothers Discovery, with the majority of the planned bid expected to be in cash. The potential acquisition would be backed by David Ellison, son of Larry Ellison, the billionaire founder of Oracle. The International Energy Agency said yesterday, in contrast to OPEC's own updated outlook, that world oil supply will rise more rapidly this year, and the surplus could significantly expand in 2026 as OPEC Plus members increase output and supply from outside the group also grows. IEA forecasts raise a concern of a market surplus, even though it upwardly revised its forecast for growth in world demand this year to 740,000 barrels per day, up 60,000 barrels per day from the previous forecast, citing more resilience in advanced economies. South Africa's online retail turnover is expected to top 130 billion rand, that's $7.42 billion this year, and account for 10% of total retail sales, driven by on-demand grocery and fashion, as well as the entry of global competitors such as Amazon. A study released yesterday by Worldwide Works in collaboration with MasterCard, Peach Payments, and Ask Africa showed that online retail sales grew by around 35% in 2024 to an estimated 96 billion rand and accounted for roughly 8% of all retail trade in South Africa. The UK economy stalled in July, with the gross domestic product recording 0% growth as expected after a 0.4% bounce in June. Other data showed that monthly industrial and manufacturing production dropped by 0.9% and 1.3% respectively in July. Asia-Pacific stocks and equities in several parts of the world have also been mostly rallying as investors see sentiment boosted by the prospect that weakening jobs and tame inflation in the US signals a high chance that the Federal Reserve will lower interest rates next week. Well, that's all we can take on this episode of Global Business Insights. This is Bode Oshosami. Thanks for watching. Bye for now.